Welcome to our guide on mastering payroll calculations. And let's start with gross earnings, or the total amount of money an employee earns before any deductions are made. And so this includes wages, salaries, piecework, and commissions. First, let's talk about wages and salaries. If you're paid by the hour, your earnings are calculated by multiplying the number of hours you worked by your hourly rate. For example, if you earn $15 per hour and work 45 hours in a week, your gross earnings include 40 hours at $15 per hour and 5 hours of overtime at $22.50 per hour. And so part of this week, we'll also learn how to calculate overtime. Now, if you're on an annual salary, this amount is divided by the number of pay periods in a year. For instance, if you earn $60,000 annually and are paid bi-weekly, each paycheck would be about $2,308. Next, we have piecework and commission. Piecework is based on the number of units you produced. So if you earn $2 per unit and you produce 500 units, your gross earnings would be $1,000. Commissions, on the other hand, are usually a percentage of the sales you make. For example, if you earn a 5% commission on $20,000 in sales, you'd take home $1,000 in commissions. And these types of earnings are common in sales and manufacturing jobs. Moving on to payroll taxes. Payroll taxes are deducted from your gross earnings to fund various government programs. First, we have Social Security and Medicare taxes. Social Security tax is 6.2% of your earnings up to a certain limit, and it changes just about every year. For 2023, it was $147,000, and both the employee and the employer contributes to this tax. For example, if you earn $50,000 per year, you'll pay $3,100 in Social Security taxes. Medicare tax is 1.45% of your earnings with no wage-based limit. There's also an additional 0.9% tax on earnings over $200,000. So if you earn $80,000 annually, your Medicare tax would be roughly $1,160. Aside from Social Security and Medicare, there are other payroll taxes like federal unemployment tax, or FUTA, which is paid by employers. The standard FUTA rate is 6% on the first $7,000 of each employee's earnings. For example, an employer with one employee earning $7,000 would pay $420 in FUTA taxes. State unemployment tax, or SUTA, varies by state, and some states have higher rates than others, which can impact the total payroll taxes employers need to budget for. Finally, let's discuss income tax withholding, which is the process of withholding a portion of your paycheck to cover federal, state, and sometimes local income taxes. And this week, we'll learn about withholding calculations. And when you start a new job, you fill out a W-4 form, which tells your employer how much federal income tax to withhold from your paycheck. And this form includes your filing status, number of dependents, and any additional amounts you want withheld. Employers then use tax tables provided by the IRS to determine the exact amount of tax to withhold. For example, if you earn $1,500 bi-weekly, the tax table might show that $150 should be withheld for federal income tax. Employers also have a critical role in paying taxes. They are responsible for correctly withholding and remitting these taxes to the appropriate government agencies. This includes not just federal and state income taxes, but also Social Security, Medicare, and unemployment taxes. And it's crucial for employers to adhere to deadlines for tax deposits and filings to avoid penalties. For instance, quarterly payroll tax filings, known as Form 941, must be submitted by the last day of the month following the end of each quarter. And that wraps up our brief overview of payroll calculations. So I've covered just the essentials of gross earnings, payroll taxes, and income tax withholding. With these basics in mind, you'll be better equipped to understand your paycheck or even manage payroll responsibilities. Thanks for tuning in, and good luck with your assignments this week.